today I have a FIRPTA expert on with me, and we are going to discuss how to set up real estate investments, what to look out for, common mistakes people make, and kind of go through procedurally how it works from buying a property to selling a property and what you have to look out for in the dreaded FIRPTA withholding. If you don't know what that is, that's going to be my first question. So today on the channel, we have Miss Julie. I appreciate you being here, and I have some FIRPTA questions. We recently had a call last week, and I realized you know more about this stuff than I do, and I wanted to have you on the channel and feature you to ask you some questions, both for my edification and to learn more, and also for the channel. Obviously, the people out there presumably know less than both of us do, so this is what the whole point of educating them on YouTube. So really quick to start out, for foreigners investing in the U.S., what is FIRPTA and like why is it important to people?
So FIRPTA is an acronym. It stands for the Foreign Investment and Real Property Tax Act, right? So back in the 80s, the IRS wanted to level the playing field between U.S. investors and foreign investors. And so FIRPTA is a withholding tax. It forces the buyer, who is also known as the withholding agent, to hold back a portion of the seller's proceeds and send that money to the IRS as a deposit against their capital gains tax. So it's just a way for the U.S. government to ensure that that foreign seller is going to file a tax return and pay their fair share of the taxes.
Yes, because real estate located inside the U.S. is pretty clearly and understandably subject to U.S. income taxes on those gains. I mean, it's located here. So what does it generally apply to?
It applies to sellers that are considered foreign. So when you're talking about an individual, you're looking for a non-resident alien. And when you're talking about entities, it's talking about foreign corporations that haven't made any special elections, foreign partnerships, foreign trusts, and foreign estates.
Okay, so basically the only U.S. person would be like a U.S. citizen or a U.S. Owned LLC or potentially a U.S. corporation. Those would not have FIRPTA withholding.
So, I mean, again, when we're talking about individuals, a U.S. citizen, a permanent resident with a green card, or maybe someone who's a resident because they pass a substantial presence test. Maybe they file a joint return with their spouse, something like that. And then as far as entities go, as far as the LLC goes, it's interesting that you brought that up because it really determines how that entity is taxed, how that LLC is taxed, whether it's a disregarded entity, whether they made a C Corp election, or whether it's a partnership, determines whether or not FIRPTA applies. So sometimes you can have an LLC formed here in the United States, right? But if it's a disregarded entity, meaning that there's no separation between the entity and the owner, you have to look beyond the LLC and assess the owner of that LLC to determine their foreign status. And FIRPTA could apply to what would otherwise be considered a U.S. LLC.
So would a multi-member LLC, if it had two foreign owners, FIRPTA would still apply, even if they give a W-9, or no?
No, FIRPTA would not apply in the sense of the person purchasing would not have to worry about FIRPTA because the entity selling that property is going to be classified as a U.S. partnership because there are two members. And so they're still going to be withholding, but it's a different kind of withholding. It doesn't have anything to do with the buyer seller. It has to do with exactly.
Yeah. So I have clients to do that because they want control of it and they can manage the timing a little differently. And you can play with it a little bit more. But in terms of the FIRPTA stuff, I know you work literally your total FIRPTA is the business, and you do FIRPTA stuff all day. What's the most common like setups that you're seeing? Like what out of if you had to break your clients into percentages of like foreign corps, US LLCs, foreign persons, like how do you break it down? What's most common for you to see?
I would say a majority of our clients are individuals that own their property outright, or that own it in their individual name. And they're either, a majority of our clients are from Canada, Germany, the UK. I mean, they're from all over the world. But I would say that individuals, non-resident aliens, represent a majority of our business. And then we have a good handful of foreign corporations that are selling property, that own property and are selling it, that are subject to FIRPTA. But on occasion we'll get, a foreign trust. A lot of Canadians especially like to own property in their Canadian trust here. And so when they turn around and sell it, it's going to be subject to FIRPTA. But I would say 80% individuals, 20%, 19% of companies, and then, just a 1% of
Yeah, and I asked
everything
you
else.
about. I guess you would have almost 0% of U.S. corps and things like that because there's no FIRPTA. So, so
Yeah, and so I mean, with our business model, we don't do tax returns for U.S. people or entities. So we only work with foreign sellers that have to go through the withholding process. I don't have
yeah,
any
well, that's
U.S.
great. Your
customers.
niche and that's why you can focus and be really, really good at your niche. So, like, if you're watching this video right now and you're a Canadian person who owns a house and you're about to sell it, you can contact Julie, and she is very competitive pricing and really knowledgeable about this stuff. So you can definitely reach out to her, and she'd be great. Can you walk me through, like, kind of in micro steps of what a normal real estate transaction is like? When if I'm a Canadian or and whatever, a Mexican dude who has a house and I want to sell it, like, do I have to deal with title agencies, title companies? How does the withholding work? What's the timing? Like, tell me, can you walk me through like a typical transaction?
Yeah, absolutely. So, um, I can walk you through how I would love to see transactions go. Unfortunately, when it comes to FIRPTA, there's such a lack of education and such a lack of just fundamental understanding of its existence. And so, unfortunately, a majority of the clients that we work with, the first thing out of their mouth is, "Oh my gosh, my agent never told me about this. What do I need to do?" And we've got days before the closing, and we're all pulling our hair out, and we're like walking around like chickens with our heads cut off. But there are a handful of people that are really starting to get it. And so when as far as a real estate agent goes, as soon as you find out that your client is not a US citizen or that they don't have a green card, that there may be a need for FIRPTA, I would just have you reach out to somebody like me, someone that really understands what FIRPTA is all about. Let's find out if FIRPTA applies. Can we get out of it? Can we rely on one of the exceptions? So that's what happens when somebody calls me. Sellers always have the same three questions. Do I really have to do this? How much is it going to cost me? And when do I get my money back? And so I never want to withhold when we don't have to. So there's a lot of exceptions to FIRPTA, which we'll talk about. But ultimately, what I do is I interview that person. I find out what kind of property they're selling. How much are they selling it for? Do they know anything about the buyer? Um, can we do a 10% withholding instead of a 15% withholding? Because, FIRPTA's, the withholding is based on the sales price. And
And the
that
use,
extra
right?
5% can
Also, if
make a
it's like
real
a
difference.
primary residence, right? Is there use exceptions too?
Yeah, so absolutely. So we try to fully understand what the transaction's all about. We look for opportunities to reduce or eliminate the withholding. And if we can't, then we just face it head on and we say, okay, this is what we need to do. So that foreign seller, if he's never filed a tax return here, that's how you get your money back from the IRS. So, FIRPTA is just a deposit against a capital gains tax. Very few people that I work with actually owe that much tax,
It's
when it comes down
15%
to
of the
it.
gross selling price. So if you're selling $1 million house, there's
Exactly.
$150,000 paid in for taxes, and you probably don't have that much gain.
Exactly. And in a typical transaction, at least the way we've been handling it the last couple of years because of COVID, there's no consideration for any basis adjustments, whatever. So whatever the property is selling for, it's either 10 or 15% of that gets collected and sent in. In order to get a refund, you have to file a tax return. And in order to file a tax return, you have to have a US tax number. So if you don't already have a social for some reason, or you don't have an ITIN number, or it's expired or something like that, then we have to go through the process of applying for one or renewing one that somebody has that's already expired. That the government won't make a refund to someone with an expired number. So we have to make sure they've got a number. We file their tax return. We get to show the IRS how much profit they made, what their true gain was, and the tax is calculated. And if 15% of the sales price is more than what they owe when we file the tax return, it generates a refund. They get a rebate of the difference. And so that's how it works. So FIRPTA is just a withholding tax. It's
So in
not
a
a payable
sample
tax.
transaction, I'll use $1 million again, even though it's a lot. $1 million selling price, 150,000 was told. But let's say 2 years ago you bought the house for 800,000, and so you have a $200,000 gain that's taxable. You sold it for $1 million. You bought it for 800. There's a $200,000 gain. Obviously, the tax there is not going to. The max tax is 23.8%, right? Because it's like net investment income tax and everything else. It's around 20%. So you're looking at like a $40,000 tax, but you had 150,000 withheld. So, again, rough numbers. So you'd be asking for $110,000 refund on that. And the problem, I mean, a big problem is that when people have mortgages and they can't pay their mortgage off because they have tax withholding. So there can be definite issues with that, right? Have you seen that a lot with people not being able to pay off the mortgage because of FIRPTA withholding?
Yeah, it's not so much that they can't pay off the mortgage. I mean, definitely it's very common that there's not enough money in the deal to pay everybody. The FIRPTA withholding, the mortgage, the real estate commission, the tax liens, the judgments, the city fines, sometimes there's just not enough money to go around. And in that situation, the seller has to come up with additional funds, which most of them don't have it, or we have to apply for what's called a withholding certificate.
And okay, so withholding certificates, something you taught me in the last call, or you told me about at least. I know about the withholding certificates, and that's in short. And I'll let you explain it. But my understanding is you basically pre-tell the IRS you're selling a house, you share all the details, you say your basis and what you're selling it for, and you say, hey, look, please, can I lower or exempt withholding? And then from there, the IRS says yes or no. Now, what's the problem with that? They're taking like 12 months to do these, right? Is that the issue?
Minimum right now. So the the instructions, and this is all because of COVID and government shutdowns and who knows what else. But the processing time used to be 90 days. And so back in the day, withholding certificates were awesome because it was a way for these sellers to get a majority of their funds back within a few months of selling the property. And so they were reinvesting or they were doing this or whatever. And so, I mean, it was called the glory days, if you will. And then as events started happening, the processing times got longer and longer and longer. So I can't speak for all withholding certificates, but I can tell you that I personally, I mean, I stopped doing them as a general rule of thumb, just because I can normally get a person's refund back faster by not applying for a withholding certificate. But I did get talked into making an application recently, and it was submitted July of last year. So we're pushing the 12-month mark as we speak.
And meanwhile, the value of their home is increased. But it's supposed to be under contract when you send it in, right? So
yeah, it has to be, the property has to be under contract because you have to have all the actual data for all the parties when you submit a withholding certificate.
So you just have a property under contract for a year and a half. I mean, I guess for maybe a commercial deal or something, it would make sense.
Well, actually, in this situation, the sale was completed, but instead of the withholding going to the IRS like it does under traditional means, the closing agent agreed to hold those monies in their escrow account. So the property did transfer to the new buyer. They've been occupying it since the day of closing, but it's just that portion, that withholding is still sitting in an escrow account waiting for the IRS to give us their blessing.
That was July last year. So they're emailing you every month and they're like, hey, so yes, do you get anything? And you're like, no.
And I just keep saying, I told you it was going to be 12 months. So, yeah. I feel for people, and I don't want to turn this around, but I feel for these sellers, and I honestly, I feel for the agents at the IRS too, because when you get an opportunity to talk to them about your files, you can just hear how stressed they are and how, they're working very hard and diligently to get through the massive amounts of paperwork that they have. But it's just like, it's no different than, you're a CPA, you do tax returns. Imagine being in a constant state of tax season.
Yeah, and also, on a government salary, every auditor I've ever talked to is completely overworked. They're impossible to get a hold of. They're just the IRS is just supremely understaffed. I mean, even when they said there's 80,000 people at the IRS last time, maybe let's say there's 100,000. There's 300 million Americans, and we're not even talking about Americans here. We're talking about foreign investors. So like that number is completely askew, and that's I'm laughing because it's ridiculous. There's nothing to do, but
it is crazy, and so you've got the domestic branch of the IRS that a majority of people are dealing with, but then there's this whole other division of international. And within the international, there are people that are working multiple divisions. They're working on FIRPTA, they're working on large corporations, they're working all these different areas, and they get pulled wherever they're needed. And so I don't envy them. Let's just say that. So long story short, withholding certificates are awesome. If we can ever get back to normal processing times, they're a great tool, a great way for sellers to get their refunds faster. But for now, based on the processing times I'm experiencing, I cannot recommend going through that process when I know full well that I can get a person's refund back faster by sending the money to the IRS and simply filing a tax return to get it back.
Yeah, I agree. And I wanted to ask you now about some of the biggest mistakes you see clients make, but I want to interject my own little thing and get your comment on it. Basically,
Okay.
about estate taxes. Like when you talk about the biggest mistakes client make, like I think one of the biggest problems with owning real estate in your name as a foreign person is while maybe you have preferential income tax rates, you have estate tax exposure. Have you had to deal with estate tax issues in the with your clients? Because basically,
In the FIRPTA
yeah,
world.
when a person owns a house and they die, technically that asset is subject to U.S. estate taxes. It's physically in the U.S. and the exemption is only $60,000. So if you have $1 million house, let's say you have $1,060,000 house, so you're paying estate taxes on $1 million. That's potentially $400,000 up to of estate taxes. Have you had to deal with that?
Absolutely, absolutely. And so you're exactly right. And so what's happening is, you've got two people that own this property, usually a husband and wife, but it could be anyone. So you've got two people that own a property. Someone passes away. I'm in Florida, and so in Florida, when you own property as husband and wife, it automatically, the property just automatically goes to the surviving spouse. It doesn't require any kind of probate. And so people have this false sense of security, thinking that they're all good, that there's nothing else that they need to do. Nobody in their life is giving them any advice about, oh, hey, by the way, your house is worth $1 million or $500,000. You need to take this estate tax seriously. So they don't know about it. They don't think about it. They don't file on time. You only have 9 months to file without an extension. And so then a couple years go by and they turn around and they try to sell this property, and the title company that's doing the closing pumps the brakes and says, hey, we want proof that these estate taxes have been addressed or paid for or waived or whatever the situation is. And I don't know if your experience is the same, but how long does IRS take to process estate returns and issue a clearance letter?
At minimum 2 years. So after you file and they process everything, which is generally at least 6 months, then we just requested one. We filed one 8 months ago. We just requested a transfer certificate, and they sent us a letter back and said that the process has to be reviewed by an IRS attorney, and generally that takes between 18 to 24 months, and it's in line. So
yeah,
and it's just some disaster.
In the meantime, this foreign person, they sell the property, it goes to the new buyer, which I'm not even sure how that even happens. But in the meantime, the title company is withholding 100% of the proceeds. So they hold back 100% of the proceeds after what needs to go to the IRS for FIRPTA. And so here you are, you just lost your spouse, and now you sold this property and you don't have a penny to show for it, because all of the money is being tied up either, for FIRPTA withholding or, in anticipation of what the estate tax is going to be. So it's a problem. It's a real problem. And there doesn't really seem to be a lot of consistency from, county to county or state to state or title company to title company, attorney to attorney. They're all kind of handling it differently. And so it's hard to get a grasp on how you're supposed to counsel the client. I can only tell you what's required. I don't know how it's actually going to be handled for you, so it's kind of difficult. So then they're scrambling to find somebody to do an estate return.
And there's not a lot. I mean, when I was learning how to do estate tax returns and dealing with it, there's no information online. I put up like 5 videos about it, and I get calls about it one a week at least, which is still kind of pretty rare. It's not that much, but there's not a lot of information about it out there. And that's why I like to always touch on it in these situations, because at the end of the day, it's completely avoidable. And in terms of like how to structure your real estate, that if you own stuff, and I'm going to get off on a tangent, but it's you can generally own stuff that's protected from FIRPTA, protected from estate taxes, and maybe have a 1 or 2% increased overall tax rate. Yeah, you're going to pay your accountants more, but you're not going to pay any FIRPTA. You're not going to pay any of the other stuff. It just, people don't do it. It's more complicated, and there's not good advice out there. So
yeah, I agree with you. And here's the thing too, like I in my practice, I don't really get involved in telling people what kind of entity to set up. It's just not part of my business model. But I do tell them that there's a number of things that people worry about. They worry about estate taxes. They worry about staying anonymous. They worry about, the lowest tax rates, reducing FIRPTA. But there's usually not a single solution that checks off every single box.
I'm happy to talk about like the most common and the most like secure solutions and how to do it. The short answer is a foreign corporation or some kind of foreign entity owns a U.S. corp or LLC taxes corp that owns the property, and then that doesn't have FIRPTA. Yep. And then basically, when you sell the property to bring the funds up without withholding taxes to the foreign entity, you liquidate the corporation when you want to disperse the funds back up to the parent entity. So that way, you're paying 21% federal income tax, and you're paying a whatever state tax there is, depending on where you're investing. And, you're keeping your tax in the low mid 20s on the gains. And there's a lot you can do for real estate to mitigate that, which is pretty similar to what you pay personally without any estate tax implications or any FIRPTA. You do have to deal with owning different levels of entities and filing more complicated tax returns. But I mean, I can understand why you don't have to advise on this, because people are coming to you when they're selling. They're coming to you at the end of the process. They're not coming to you.
They're coming to me when
they're coming to you at the end of the process.
Absolutely. Yeah. But you know what? This brings up an interesting thing, because that's one of the questions that I get all the time is my closings tomorrow. Like, what can I do? Can I quit claim it to my daughter? She's a U.S. citizen. Can I put it into an LLC? Can I add another member? Can I do this? Can I do all these things? And, people have to be really careful, because when you start doing things and making changes at the last minute, solely for the purpose of avoiding FIRPTA, where does that put them? It puts them in the danger zone of, tax evasion, which is not anything I give advice on, right? So this just goes to your point about being more
proactive. You do that at the beginning. Yeah.
Proactive at the beginning, these are the things that you need to think about before you purchase real estate.
If you already purchased it and you realize you have 10 houses and you're an old person and you want to and you're like, oh, you're waiting to sell it, maybe you should just contact Julie and just sell everything now, deal with FIRPTA and deal with it all. Because FIRPTA, at the end of the day, FIRPTA is not a tax, it's a withholding. So it's not, it doesn't increase your tax. Right. It is annoying, it is withholding, but if you own the properties outright, it's not really a problem. But that's the best way you can't just gift it, because technically when you're a foreign person gifting U.S. real estate, it's subject to the same estate taxes. Functionally, there's no way for the IRS to know when you're giving personal gifts of real estate. Like there's no way for the IRS to know when someone dies in another country. So functionally speaking, like this stuff isn't super aggressively pursued by the IRS. However, the gatekeepers, the title companies, the brokerage companies, the mortgage companies, those are the people that are enforcing the estate taxes and really, enforcing it. So you have to pay it and deal with it. Because if they won't really take your property without a transfer certificate, that you have nothing you can do about it. You're kind of out of luck. I mean, you can get another title company, right, but for the mortgages and for everything else, it's tough.
Sometimes people, when they have the ability to do so and they're in that situation, they'll pull the property off the market, file the return, wait for it to get processed, and then put the property back on the market. And I'm not saying that that's a right way or a wrong way, but it's what that person needed for them to feel comfortable moving forward. The idea of, selling a property and not having tangible access to that asset anymore, and someone's just willy-nilly holding on to, $800,000 of your proceeds, is emotionally and psychologically sometimes more than people can handle. So they'll actually, take the property off the market and wait the 2 years for, those certificates to come in, and then try again. And the problem with that is who knows what the market's going to be like in 2 years? Is it going to go up? Is it going to go down? You could have sold it for, $1 million. Now you're selling it for 700,000. Maybe you could sell it for $1 million too. So,
anything could happen. Yeah.
Anything could happen, something could happen to you. You could pass away, without it. So it just all just confirms what you're saying, is it's so important to be proactive if you're going to invest in real estate here in the U.S.
Well, I feel like
learn a few things.
I think this video that we've done so far, I think I pressed the record button and we were doing information since the beginning. We're at 27, we're almost at 30 minutes. We could talk to you all day, but I think we're going to lose people. I want to just wrap it up here, I think. And in summary, basically tell people,
Sure.
look, if you're a foreign individual and you own U.S. real estate and you're thinking about selling it, you can contact Julie. You can contact me at my office. If you want to buy and invest in U.S. real
Absolutely.
estate and restructure stuff and structure it the right way, you can contact me or you can contact Julie. She can forward you to me. It doesn't really matter.
Yeah, I'll just forward it
Yeah,
back to you.
I mean, we're both busy enough. It doesn't really matter. We're making this video to educate the regular people, which my channel has a lot of foreign investors on it, so that's why we're doing this. So, where can everyone find you, Julie, if they need to contact you about stuff about this kind of FIRPTA stuff?
TotalFirpta.com.
TotalFIRPTA.com. You can't forget it. It's amazing. I really appreciate having you here and for sharing this information. I think we covered enough. I don't know who's watching this to the end, but if you are and you need more help, you can definitely schedule a call with me. You can contact Julie. We're here to help.
Yep.
Like and subscribe, and I'll see you guys on the next video. Thanks for being here. Thank you, Miss Julie.
You're welcome. Thank you.